Dubai has always been a city that thrives in uncertainty. But with the recent tension involving Iran and disruptions around the Strait of Hormuz, many investors are asking a simple question. Will Dubai real estate continue to grow, or are we entering a risky cycle? As someone who has been involved in high value luxury asset acquisition in Dubai, I want to give a balanced perspective based on data, history, and global financial behavior. Number one, this is not unprecedented. First, let's start with history. This is not the first time the UAE has faced regional security tensions. In January 22, when missiles targeted Abu Dhabi, many expected panic, and instead, something interesting happened. Capital started flowing into the UAE financial system and real estate sector. Between 22 and early 25, Dubai property prices rose nearly 60%, driven by global capital inflow and investor migration. In 2025 alone, Dubai recorded almost 200,000 real estate transactions worth more than 538 billion dirhams, one of the strongest years on record. So, history shows something important. Dubai markets tend to react differently than expected during regional uncertainty. Number two, global turmoil and the Strait of the Hormuz. Now let's address the real risk. If tensions escalate and the Strait of Hormuz disrupted, the impact could be global. Nearly 20% of the world's oil supply passes through that corridor, making it one of the most critical shipping routes in the world. Recently, insurance companies even cancelled war risk coverage for some vessels operating in the Gulf, highlighting how sensitive the global energy market is to instability in the region. In such moments, investors usually move capital to traditional safe assets such as gold, US Treasury bonds, US dollars, Swiss franc, Japanese yen. But when currency volatility increases globally, investors start looking for hard assets. That's where real estate enters the conversation. Number three, the dollar peg advantage. One structural factor many people overlook is the currency stability of the UAE dirham. The UAE dirham is pegged to the US dollar at 3.67. That means if you hold assets in Dubai, you are effectively holding assets tied to one of the strongest reserve currencies in the world. For international investors, that creates a powerful equation: real estate appreciation plus dollar stability. In periods of currency uncertainty, this becomes very attractive. Number four, money flows like water. One of the best financial lessons I learned in my career is simple. Money behaves like water. If it stays stagnant, it loses value. If investors exit equity markets during volatility, the capital must find a new destination. Let's look globally. Europe, economic growth is slowing and interest rates are remaining high. China, still struggling to recover fully from the real estate crisis. Singapore, extremely regulated with high stamp duties for foreign buyers. So where does the global capital go? Often towards markets that offer stability, strong yields, global accessibility. Dubai sits exactly in that intersection. Number five, Dubai's long-term fundamentals. Even with geopolitical concerns, Dubai still holds several structural advantages. A. High rental yields. Dubai offers average rental yields about 6 to 7%, significantly higher than cities like London or New York, where yields are often 2 to 4%. B. Safe haven capital. Dubai continues attracting investors from Europe, Asia, and emerging markets seeking stability. C. Diverse capital inflow. In 2025, the market saw record transaction activity with strong participation from international buyers, including investors from India, Europe, and the Middle East. However, it's important to acknowledge reality. Regional conflict can create short term hesitation in the market and temporarily slow transactions. But historically, Dubai market tends to recover quickly once uncertainty stabilizes. 6. The opportunity cycle. This brings us back to the opening statement. In every market cycle, there are two types of participants: those who panic and those who prepare. Large institutional investors and high net worth individuals often wait for moments of uncertainty to acquire distressed deals or discounted assets. Because once stability returns, market can accelerate quickly. We saw that after 2008 crisis, the COVID-19 slowdown, the 2022 geopolitical tensions. So, will Dubai continue to grow? No one can predict markets with certainty. But if we analyze the fundamentals, strong currency peg, global investor demand, high yield rentals, strategic location between East and West, Dubai still remain one of the most structurally attractive real estate markets globally. Which means the smart strategy is simple, because when uncertainty fades, markets often move faster than expected. And by the time the headlines become positive again, the opportunity may already be gone. If you want to discuss Dubai real estate opportunities in more details, feel free to reach out.